Welcome back to Doc Tickers. If you're trying to find the signal in the just the deafening noise of earnings season, you have definitely come to the right place.
And today we are looking at a big one.
Oh yeah, the absolute kingpin of the semiconductor world, the company that basically sits at the choke point of the entire global tech supply chain. We are talking about ASML.
The Dutch monopoly. I mean, they're the only company on the planet that can make the machines that make the most advanced chips. If ASML stops, the world, well, it stops.
That's usually the line, right?
Yeah.
But if you were watching the ticker tape yesterday, you saw just a masterclass in market psychology that really challenges that whole invincibility idea.
It was a brutal sell the news event, a complete divergence.
We had a quarter that was on paper absolutely monstrous. I mean, the order book just exploded, but the stock chart
Looked like a crime scene by the end of the day.
it's a fascinating setup because you have this contradiction. The companies out there saying the AI supercycle is just getting started, but in the same breath, they're announcing they need to fire 1,700 managers just to get out of their own way.
Right. So let's unpack it. We've got the Q4 and full year 2025 earnings call transcript. We've got the market data and that messy price action. What's the headline?
I think the headline is that the AI mania, it's finally, officially translated into ink on paper for ASML.
Exactly. For the last year, we heard about NVIDIA selling chips and Microsoft building data centers, but investors were waiting. They were waiting to see when that cash would flow upstream to the equipment makers.
Well, that day has arrived, but first let's hit the numbers just to set the table, because there was some noise here.
Yeah, a little bit.
Revenue came in at $9.7 billion for the quarter.
Which was a beat. Street estimates were around, what, $9.58 billion. So a solid beat on the top line.
A solid beat. But then you look at EPS earnings per share. That came in at 7.35.
And that was a miss. A pretty significant miss against the 7.55 estimate.
Ouch. In this market, a bottom line miss like that, I mean, usually you get taken out back and shot immediately. Why did the market seem to just ignore that at first?
Because for ASML right now, I think current earnings matter a lot less than future promises. The story wasn't the earnings miss, it was the bookings.
The booking.
And when I saw this number cross the wire, I actually had to refresh my terminal. I thought it was a typo. Q4 net bookings, $13.2 billion.
That is the shock value right there. Put that into context for us.
Context is everything, right? The street, looking at Visible Alpha consensus, they were expecting something like $6.3 billion.
So they didn't just beat the number.
They more than doubled it. It's a massive double beat. And get this, $7.4 billion of that was just for their EUV machines, the really high-end stuff.
But the backlog now sits at a staggering $38.8 billion. They have nearly 40 billion euros worth of machines just waiting to be built.
Which brings us to the price reaction, because this is where the psychology gets really, really interesting.
The pop and drop.
Exactly. In the pre-market, right after that bookings number hit, the stock just ripped. It was up about 6%, touching around $543.
Everyone saw record bookings and just mashed the buy button.
The headline was perfect, but it didn't hold, did it?
Not at all. By the close, it had reversed entirely. Finished in the red, down over 2% to around $4,422. That is a massive intraday swing.
And that swing tells you exactly what the market is thinking. The smart money digested the report and said, okay, we believe the demand is real, we see the orders, but we do not trust your execution timeline.
So the sentiment had shifted from, is AI a bubble, to,
here, can ASML physically build these things fast enough without tripping over its own shoelaces?
well, let's dive into that demand question first, because the CEO, Christophe Fouquet, he dropped some technical details that I think really explain the why behind this bookings explosion.
He did. He explained that we're kind of hitting a wall with Moore's law. You can't just shrink transistors as easily anymore.
So to get more power for AI, you just need more silicon area, you need bigger chips.
And he used NVIDIA as the prime example. He mentioned their Blackwell architecture, which is the current hotness.
What?
He said Blackwell requires 2.5 times more wafers than the previous generation, but then he dropped the hammer. The next gen architecture, Rubin, is going to require 10 times more wafers.
Wait, hold on, 10 times? What does that actually mean for a factory?
Think of it like real estate. If you're building a chip and you can't make the rooms small anymore, but you need 10 times more space, well, you have to buy 10 times more land.
And the land here is the silicon wafer.
Precisely. So if a single GPU now takes up 10 times the silicon real estate, that means TSMC needs 10 times the etching time, 10 times the chemical deposition, and most importantly, 10 times the time on an ASML lithography machine.
So this is the wafer hog thesis.
Mm-hmm.
It's not just that they're selling more chips.
It's that every single chip is becoming a massive resource drain to manufacture.
And that creates a terrifying dynamic for the chip makers, doesn't it?
It does. And management used a very specific phrase. They said, capacity will mean market share.
Which sounds like a very polite way of saying panic buying.
It's exactly that. It implies we're entering a phase of scarcity. If you're Samsung or Micron, and you see NVIDIA needing 10x the wafer capacity, you realize if you don't book your slot with ASML today for a machine that arrives in 2026, you are dead.
You can't compete. If you don't have the tool, you don't have the market share.
So naturally, the analysts on the call were sweating. They were asking about supply chains. Can ASML actually deliver?
And Fouquet insisted, we are not the bottleneck, certainly not this year.
He was very firm that they aren't the bottleneck yet. But frankly, I think that's where the market skepticism comes from. You have a backlog of $38.8 billion. Historically, supply chains break under that kind of pressure.
So the market is just pricing in the execution risk. Great, you have the orders, but we've seen you delay shipments before.
And maybe that skepticism is fueled by our second theme. Because at the same time they're celebrating this massive demand, they're taking a sledgehammer to their own org chart.
The bureaucracy tax.
This was the surprise of the call. ASML is cutting about 1,700 jobs.
Okay, hold on. This makes me nervous.
Yeah.
You have record demand.
Yeah.
You're trying to ramp production for this 10x wafer
Right.
reality, and you decide now is the time to fire 1,700 people.
It sounds counterintuitive,
It sounds like cutting muscle right before a marathon.
but you have to look at who they're cutting. They aren't firing factory workers. They aren't firing the core R&D engineers.
They're firing the leaders, middle management.
The numbers were stark. Fouquet said they currently have 4,500 leaders in the technology organization. Their goal is to reduce that to 1,500.
They're cutting 2/3 of their leadership layer in the tech department. That's a bloodbath.
But Fouquet was very honest about why. He said engineers were spending 20 to 30% of their time in meetings dealing with steering axes instead of innovating.
Steering axes. That sounds like the ultimate corporate speak.
I mean, it is. But it means that if an engineer wants to change a component, they can't just do it. They have to present it to the safety steering axis, then the budget steering axis, then the strategy steering axis.
It's meetings about meetings. It's the bureaucracy tax.
Exactly. When you grow as fast as ASML has, you tend to just layer on management. But eventually, the matrix organization becomes a web that traps your own people.
Okay, I get the efficiency argument, but I still see a massive risk here. When you fire 1,700 managers, you destroy institutional knowledge. You tank morale. Who's going to approve the budget if the person who signs the check just got walked out?
That is the risk. It creates short-term chaos. It's like trying to rebuild the engine of a Formula One car while you're doing 200 miles an hour.
If they pull it off, they're leaner and faster. If they fail,
The internal confusion could cause them to miss those delivery targets we just talked about.
so internally, they're cleaning house. But externally, they're also being forced to clean house, specifically with China. This brings us to theme 3.
Ah, yes, the China normalization. This is the other headwind. We've known the export controls are biting, but we finally got the hard numbers.
Walk us through the damage.
It's significant. In 2025, China was roughly 30% of sales, at one point even a bit higher. For 2026, the CFO is guiding that down to normalize around 20%.
That's a huge chunk of revenue just vanishing.
It's a mix of politics and backlog clearing. The US and Dutch governments are restricting the most advanced tools. ASML just can't sell the top-tier stuff to China anymore.
But, and here's the key, the total revenue guidance isn't dropping. It's going up. So who is filling the hole left by China?
It's the rest of world explosion. The US, Taiwan, Korea, and there's a fascinating subplot here, logic versus memory.
Yeah, let's define that for everyone. Logic is the brain CPU, GPU. Memory is the storage DRAM.
And usually logic is the big moneymaker, but ASML expects memory revenue to actually flip and become larger than logic revenue in 2026.
Yeah.
That is a massive signal.
The flip.
One acronym, HBM, high bandwidth memory. To run these AI models on NVIDIA chips, you need massive stacks of ultra-fast memory right next to the processor.
And we are in a massive shortage of HBM.
Exactly.
Mhm.
So the memory makers, SK, Hynix, Micron, Samsung, they are spending like drunken sailors to build capacity. They're the ones driving that panic buying.
Okay, let's shift to the technology itself, theme 4. We hear about EUV all the time, but now it's high-NA versus low-NA. What's the difference?
So low-NA EUV is the current workhorse. It's the machine that prints the chips in your phone right now. They've actually boosted its productivity a lot, from 160 wafers per hour up to 220.
Which is huge for customers. Lowers the cost per chip.
That's where the immediate money is. But then there's high-NA, high numerical aperture. This is the next generation.
Think of it like drawing with a fine-point architectural pen instead of a Sharpie.
That's a great way to put it. It allows for much, much smaller features. But here's the rub. Reports suggest there were 0 new orders for high-NA in Q4.
No new orders. For the future of the company. That sounds like a red flag.
It's definitely a yellow flag. Management is framing 2025 as a preparation year. These machines cost $350 million each. Customers like Intel are still just figuring out how to use them.
So the bear case is that high-NA adoption is slower than everyone hyped up.
Exactly. If customers decide they can squeeze a few more years out of the old machines, that high-NA ramp gets pushed out to 2027 or 2028.
Okay, so let's zoom out. Investor context. What does this call tell us about the broader market?
First, the CapEx supercycle is confirmed. It's real. If ASML has record bookings, it means the chip makers are confident enough to commit tens of billions of dollars 3 years out.
Which is a green light for the entire semiconductor equipment sector.
Oh, absolutely. Companies like Applied Materials, Lam Research, KLA. If ASML is building machines, they need lenses, lasers, vacuum chambers. The whole supply chain gets fed.
And ASML itself is just a cash machine. Free cash flow in Q4 was what, $10.9 billion?
A staggering amount. And they are giving it back. A new $12 billion buyback program plus a dividend raise. That's the safety net.
But it all comes back to execution, doesn't it? The backlog gives them incredible visibility. The horizon is clear. But the stock dropped because the market doubts the pace.
Right. The question shifts from how many orders can you get to what's your move rate?
Yep.
Can you physically get these systems out the door while you're firing your management layer?
That is the multi-billion euro question.
Mm.
All right, let's pivot. We've looked at the numbers, the strategy. Now it's time for our favorite segment.
This is where we take off the reporter hats and put on the hedge fund analyst fleece vests.
Please remember, dear listener, we are just voices in your headphones. We are not your financial advisors. Do your own due diligence. But if we were pitching a trade based on this call, what would it be?
I've got one. I'm calling it the capacity panic straddle.
Let's hear it.
The thesis comes directly from that capacity is market share. Quote, this implies the chip market is about to split into the haves and the have-nots.
Okay.
So the trade is long the memory makers, short the legacy foundries.
Break that down. Why long memory?
You look at proxies for Micron or SK Hynix. We know memory revenue is about to flip and beat logic. We know there's a shortage. If ASML is sold out, the existing capacity these guys have becomes a gold mine.
They have pricing power.
Total pricing power. If you want HBM, you have to pay whatever they ask. No one else can spin up a factory fast enough.
A moat built on scarcity. And the short.
You short the trailing edge foundries. With ASML cutting its focus on China and pivoting entirely to the AI ramp, the legacy chip makers are going to be starved of attention. They're at the back of the line for everything.
That is ruthless. I love it. I've got a different one, a bit more. High risk. I call this the bureaucracy breakout.
Okay, let's hear the wild idea.
It's a call spread using up BPS. So I'm buying options that don't expire until 2027.
Making a bet on where the price will be 2 years from now?
Exactly. I am betting on the organizational alpha of firing middle management. The market hates the job cuts today. It's uncertainty. It's why the stock dipped.
But you're looking past that.
Way past it. Fast forward to late 2026. You've cut 3,000 leaders on expensive salaries and replaced them with 1,400 engineers who actually build things.
So you think the margin expansion from that isn't priced in yet?
Not at all.
Yeah.
The market sees restructuring costs. I see a profit machine unlocking. You buy the 2027 calls while everyone is scared of the reorg. I'm betting the engineers were right and the managers were the problem.
Always bet on the engineers, my friend.
So to wrap this all up, incredible bookings, $13.2 billion, messy price action, the pop and drop. The thesis is intact, but the timeline is tight.
It is. ASML has proven the demand is there. The AI supercycle is not a myth. It's in the order book. Now they just have to prove they can build the machines without the bureaucracy getting in the way.
It's going to be a fascinating year to watch the ticker. ASML is the heartbeat of the AI revolution, and right now that heart is beating very, very fast.
And sometimes a fast heartbeat is exciting, and sometimes it's terrifying.
I'm going to say it better myself. That is all for this deep dive into ASML. Remember, none of this is financial advice. Do your research, and we'll see you on the next deep dive.
Keep watching the ticker.